Hi, friends. Professor Joe here. I hope you all are doing great and welcome to this video. In this video, we are going to discuss why confluence of events on a chart is very important before you enter into a swing trade. So let us see why it is so important and what are the five components of this confluence of events. Let us see that too. But friends, if you're still not subscribed to my channel, please subscribe to my channel. I keep creating a lot of content on finance, trading, investing, options, crypto. So you would be the first person to be notified every time I create a new video. Let us get back to this video. Why confluence of events is very important. Now just imagine. Let us take a real life incident. You had a friend when you were a child. All you knew was your friend's name, the name of the building, and the flat number. And because of some family issue, when you were young, very young, probably 6 years or 7 years old, you had to leave the city and go to another city. Now, many years later, you decided you want to go and meet your friend. Now, here I'm not looking at any other circumstances that your friend probably might have left their place also. Let us think about a normal situation that your friend is still staying there and you want to go and meet your friend. But now you don't remember the proper address. All you remember is few things. Number one, the building was across a big lake. Now, in a city like Mumbai, there are only couple of lakes. So you know it's, say, Powai Lake for sake of discussion. You remember that there was a road in front of the lake and there was a temple. So now Powai Lake, road, and a temple. Probably there might be one or two temples opposite to the lake. And you also remember that this tall building right behind the temple. So now you see the confluence. You know that it is Mumbai city. You know it is Powai Lake. You know there is a temple across the road. And you know this tall building whose name you remember, the flat number also you remember. Now, when you put all these confluence together, the chances are that you will surely find your friend's flat and you can go and meet your friend. But if you didn't remember these things, the confluence of things, then the chances was very difficult for you to reach to your friend because in a city like Mumbai, there are millions of buildings. Where will you go and find your friend? The same thing happens in the stock markets. In the stock markets, the markets always remember confluence of events. Now, what are the confluence of events? The confluence of events are trend, support and resistance, volume, force that you can see in the form of oscillators, and finally, a good candlestick pattern. So, when all these five things come together, then you know that there is a good confluence of events, and the chances are there that the market is going to reverse from here and give you a good entry point into the stock or into the financial instrument. So, how does this confluence of event look like? It looks like first, you should look for the trend. Second, you should look for the support and resistance. That means an area of resistance which is now getting converted into support, especially when you're going for a buy. Third, you must see in that same zone if the volumes of purchasing and selling is increasing. Fourth, you must check the oscillators, probably like an RSI or a stochastics, whether it is in an oversold position. In that case, you can easily enter into that trade. And the fifth most important point is you should also look for a market psychology that is in the form of a candlestick pattern. So if you see a good candlestick pattern over there, like an engulfing candlestick pattern, then after that pattern, you can enter into your trade. Let us have a look on TradingView how this will look like. Like you can see on this chart, this is an Infosys chart, a 1 week chart. Okay, you can see that there is a clear trend. Okay, this line I have drawn to show a clear trend. That means there's a low, there's a higher low, and the next higher low. Okay, so there is a step like market movement over here. Then you can see that this resistance over here is now converted into a support. So your first and second conditions is met over here. Now the third condition is volume. So for that, we will just increase the size of the chart. There you go. You can see some huge volumes over here. The fourth, you are looking for an oversold position in RSI. You can see over here very, very clearly that the RSI is in an oversold position. And the fifth, you can see there's a good candlestick pattern over here where this green candle is engulfing 1, 2, 3, 4 candles. Sorry, where you can see this green candles engulfing 1, 2, and 3 candles. So very strong engulfing candle. And you can see if you would put a trade over here, it's a swing trade. You can see that the market is still continuing to go up. And if you would have entered over here, you are seeing that the markets is still giving you profit. Let us take the simulator and have a look at that. Long position. You can clearly see over here is whatever you have entered over here, say 1 or 2%, you already got around 10 to 15% profit just in this one trade. So there you go. This is how the confluence looks like. Trend, support and resistance, volume, force that is in the form of oscillator and candlestick pattern. Friends, I hope that this video has made it extremely clear that whenever you are doing swing trading or long-term trading, it's long-term trading is like investing. So whenever you're doing that, whenever you're entering into a trade, make sure that there is a confluence of events. And if the confluence of events is very, very clear, visible, then enter into a long-term trade. Remember, risk management is very, very important. When you're learning to trade, do not risk more than 0.5% in any trade. And once you're comfortable trading, then you can increase your risk to 2%. And if you're really, really comfortable, you can increase it to 5% also. Remember, risk management is very, very important when it comes to any financial instrument trading. You have to diversify your risk. It's very, very important. Now, learning or becoming a professional trader requires a lot of patience, practice, and persistence. Without that, it is not going to happen. And a proper mentorship is very, very important. You need a guide to show you the way. And once you know the way, then you can move ahead. Friends, I've written a book, Traders You Can Win, but First Learn to Lose. This book speaks about technical analysis and multiple strategies about trading. If you're interested in this book, it is available in Amazon and Kindle. And friends, if you love the way I'm creating these content, please like and share my videos. So like you, there might be many others who would like to learn trading the right way. These videos will surely help them. And friends, if you're still not subscribed to my channel, kindly subscribe to my channel so that every time I create a new video, you will be the first person to be informed. Friends, all I can say is keep learning, keep growing, keep getting better each day. Thank you. Namaskar.